Good afternoon, everybody. This is Hunter Mozingo, Associate Portfolio Manager and Research Analyst for Revere Asset Management, bringing you your daily market insight video here on Thursday, July 21st, a little less than 15 minutes after market close, 4:13 p.m. Eastern Time to be exact. And today, the big storyline is the Tesla earnings reaction and how that fueled Tesla through some key levels and also helped carry the market higher today, especially the NASDAQ. We're also going to talk about the 10-year yield backing off a really important level. And we're going to talk about the S&P closing right on a major technical and just psychological level in general, and how important it is to get through that in the coming days from a bull perspective. So we're going to get into all that, the best and worst performing stocks and sectors of the day, all of that stuff. But first, let's talk about what just happened in the performance. So I basically went through this. G6 up about 0.9, S&P up about 1. QQQ up a little under 1.5. The Dow, midcaps, and the Russell all were actually flirting with being red up until the very end of the day, and a nice push into the closing right at the highs of the day helped propel these to some nice finishes as well. Dow up about 0.5%, midcaps up about 0.75, Russell also up about 0.5%, 60/40 up 0.86, protection up 0.92. Market state remains the same for the time being, correction, short-term uptrend, but we do have a change here on the trend gauge. So we've got the medium term today moving from down to neutral. So we're staying above the 50-day on the S&P. That was a really big thing today. We looked like we were going to kind of go back down to it. We got close, but not all the way there, and ended up bouncing and ultimately finishing at the highs of the day. But we've got this moved here to medium. That could be subject to change soon, but we want to see weekly close above the 50-day. We want to see that 50-day start to hook up as opposed to angling down before we really change that to uptrend here. So short term, still in bullish as of Don's video yesterday. Market leaders still neutral, but leaning bullish, especially with some pretty positive action today. We've seen a lot of the leading type of names either continue their really strong price action or consolidate and digest in pretty healthy manners. So market leaders continue to improve. Long-term, still below the 200-day moving average across the board, however. So before we get to the tail of the tape, let's first highlight Revere for a quick moment. Main thing here is my email, hunter@revereasset.com. If you have any comments or questions regarding the video, regarding a certain stock, anything like that, don't hesitate to send an email to me here, hunter@revereasset.com. If you want to reach out to anybody, you can email them, Merrill, Dan, Tim, or Don at revereasset.com as well. You can always call as well, and you'll get Dan on the phone, 855-732-5932. So let's get to the tail of the tape. I've got the S&P over here on the right-hand side. Market state, as we mentioned, correction, but short-term uptrend. Sentiment-wise, we've seen the VIX come off pretty substantially back below kind of the 24 to 26 level, which is where we had been hovering around. And that's relatively important. The 24 level below there can be kind of the sweet spot for buying. And then once you get down to, say, the 15 to 18 range, that can indicate that you're potentially a little bit overbought. But right now, the important thing is we've come off of the VIX being super elevated, like we've seen it for the majority of the time we've been down in this area. Put call ratio, however, still kind of in the same range, closed at 0.94. Haven't seen this come off in a material way, at least yet. And by material, I mean I would be looking to see this close in the 0.6, 0.7, low 0.8 range. We kind of continue to live in the 0.9 to 1 range, at least on a closing basis. And the fear greed moves up a tiny bit, up 2 points from yesterday to a 41, but still in the fear range. So bull case is now in effect here. We're above the 21 EMA and holding above it, as well as the 50. You see the 8 hooking up through the 21, and that has now occurred on all of the major 5 indices, as well as tons of stocks, the G6 type of names, all of that stuff. So the 821 cross now in effect. Now you're looking to see if the 50 can start to curl as these moving averages catch up. News-wise, the ECB raises 50 basis points this morning, first time in 11 years. That would be considered bad news for the market, at least by most. Jobless claims higher than expected. Also, typically not the best news for the market in the sense that that gives the Fed more room to potentially continue to raise rates. But nonetheless, amidst this bad news that came out this morning, the markets continue to march higher. Same situation here, July Philly Fed 6-month biz outlook pretty significantly below expectations, as you can see, minus 12.3 versus a 0.8 expectation. That was that's pretty bad. But again, the market shakes it off, kind of like it shook off the Google news yesterday, where Google announced pretty much the same thing Apple did on Monday, that they would be slow in hiring and cutting spending a little bit, And the market has kind of shaken those things off as the week has worn on, which the news has been pretty bleak this week, and the market has continued to make significant strides in repairing some of these charts, getting back above the moving averages. So it's just something I want to point out. When the news is really bad, but the market doesn't seem to care and continues to move up, you always want to be aware of that. So what were we watching today? S&P versus support, 3,900 to 3,920. Didn't quite get there, slightly above, but ran right up into resistance, pretty much closed right on it, closed right under 4,000, 39.99 is where we closed today. QQQ pushed through this 303, 305 resistance, and now you're looking kind of at like the 310 area to 315 area being the next levels of resistance on the Qs. Action-wise, opened down 0.15%, spiked up to 39.68, down to 39.27 or 39.28 there, as you can see. Then we have a sharp move up to 39.87, a brief little pullback where we bounce off of 39.68, which was resistance earlier in the day, and we trend higher into the close, ended up closing pretty much on the highs of the day. As you can see here, we closed at 39.99. That's also the high of the day. So maybe it's a cent or two off, but pretty much closing right at the tip top of the candle. Again, performance-wise, S&P opened down 0.15%, finished up about 1, G6 up 0.9, 60/40 0.86, grow up 0.92. Bonds putting in a really nice day today across the board, not just treasuries or a specific area. General bonds had a nice day today. So we'll look at some of those charts in a second. XLB, that's builders, XLB, KY, and V, healthcare, discretionary technology, all having a good day. ITB as well, builders having a good day. Electric vehicles, obviously on the back of Tesla moving up a little bit. Software names, gold and miners also having a good day, as well as steel, even though steel, the metals and mining ETF, XME, wasn't having the greatest day. We saw steel have a good day. So we're going to look at that in a second. Oil's having a really poor day as crude oil pulled back off of the 100 level, and airlines having a bad day after I think United had earnings yesterday. So portfolio wise, we moved up a little bit here on beta, 0.68 to 0.79. We bought 5% Tesla. We'll talk about that in just a second. Bottom line, S&P stays above the 50-day rally continues. Today's close right on the key 4,000 level. We hold above the 50-day moving average. Major victory for the bulls today, in the sense that we stayed above it for the third consecutive close here and closed right at the top of the range after we ended up coming back down a little bit this morning. So a good day for the bulls. That's the bottom line, above the 50 and right on this key 4,000 level. And let me just refresh my S&P 500 chart here so you can see that right there up into 4,000. So this is the major level. Huge psychological level. You can see resistance back in here. Obviously we danced all around it in here, but this is a major level for the S&P to potentially reclaim. Not only that, but there's a gap to fill right here around 40.17. So something to watch. This 4,000 to 4,020 area wouldn't surprise me if we possibly backed off after we pushed up into that area and filled the gap. We are relatively extended on a short-term basis, but not significantly. But this 4,000 level, something you got to be paying attention to. If we do get above it, are we able to respect it and stay above it? That's the main question I have here. Or does it just simply turn into resistance and ultimately shut this rally down? Either way, set your alerts, be aware. If you push through it, the next thing you want to see is, okay, can we stay above it? And that's what I'm going to be watching for on the S&P. QQQ, which has been the strongest off the bottom after being the weakest all year long pretty much here. As you can see, definitively above the 50-day. It's already filled that gap from the same time period in which I was just talking about on the S&P, and it's pushing up into this consolidation range here. So 307 is about where we closed today. You can see the next big area that it'd have to get over is kind of the highs of this consolidation. So 310 to 315 is the next areas of resistance I'm looking at here on the Qs. Conversely, you just want to see this hang out and stay above 300 to the downside. And moving along here to the Dow, like I said, it ends up finishing green today. Also 3 consecutive closes above the 50. The gap to fill is in play here in pretty much the exact same manner that we just looked at with the S&P 500. This 320 level, again, a big level to reclaim for the Dow. MDY, which has come to life a little bit recently. RS line starting to hook up after being pretty abysmal down in this area. Again, same kind of thing, 3 closes at or above the 50, moving up, trying to get back above this 450 level and also fill this gap. And lastly, small caps here above the 180 level, same kind of thing, close to filling that gap. The Qs are the only one that's filled the gap down from 6.9 to 6.10 at this point, but all the other indices are relatively close, mid caps being the farthest away. But same situation here, IWM, relative strength hooking up above the 50. The ADMA is actually crossed above the 50-day for small caps. 21's not far off either. So quickly before we get to Tesla, we're going to talk about the dollar for a second. It's had a brief pullback here, which has been helpful to the market in general, just to help kind of fuel and sustain this rally a little bit. And then we've also saw TNX, as I mentioned at the beginning of the video, the 10-year yield, having a tough time getting back above this 3% level. You can see the moving averages have all clustered together, a pretty harsh rejection today. And I would keep an eye on this 2.9 area or 29 on TNX if you have Market Smith. I'd watch to see if that's broken, because you can see it's held up off of that area 3 times now, closed right on it today. You got the moving averages crossing to the downside. You got a pretty poor close today. I keep an eye on this to see if this ultimately continues lower and maybe takes out even these 27 levels here on TNX. So TNX struggling with 3% and kind of rolling over to going sideways, and that's also been helpful for technology and the market in general. So let's get into the charts here. Tesla, the big star of the day, and we did initiate a position here on Tesla. As you can see, up about 10%, pretty significant volume, the most volume it's had in quite some time, actually since it pretty much made its year-to-date lows here. So Tesla up over 750, which was a huge level for it to clear from a technical standpoint, and also up over 800, another big level for it to clear. So we did initiate a position on this today. First buy being in the low 780 range when it came back and retested the after hours high and ultimately held. And then subsequently, using our pyramid approach, we added to it just a little bit later. And this continued higher. It worked very nicely today. As you can see, the big thing to take away from the earnings was a positive EPS surprise, significant beat on EPS. Market always likes that. So Tesla, the star of the day, as I said, really pushing the market higher, carrying the NASDAQ higher. But we also had some other big tech names playing a role today. Apple continues its monster move here up off the bottom, up about 1.5% today. And then Amazon, the other big tech name that really had juice today, up about 1.5% as well. Similar patterns there on Apple and Amazon. Apple a little bit stronger. Celsius, a name that we do own, having a nice day above this 80 level. It is a little short-term extended, but nonetheless, having a nice day here. Back-to-back strong finishes from Celsius above the recent highs that it had made. Main thing now is, can it hold above this 80 level, or does it ultimately return back to these moving averages? But nice volume here on Celsius as it's kind of made its way up and stair-stepped up the right side of this base, as you can see there. Now, 2 names that I think are interesting. I'm not saying these are the strongest names, but I'm pointing this out because both of these names have made incredible recoveries. DOCN had a just brutal sell-off here after looking like one of the okay growth names out there. This went from, I believe, about 46, 47, all the way down to 33, 34 in a really short period of time on a downgrade, if I'm not mistaken. And this name has made a recovery back above the moving averages. Now, yes, it's on below average volume, but my point here is, even though this had a really just poor price action downgrade, it's made a nice recovery and back above the moving averages. Time will tell if it's able to repair its chart and start to potentially even show relative strength. But the main thing here is it didn't make a new low, and it's recovered as the market has continued to move higher. Similarly, Unity Software had a really nasty gap down here on an acquisition that they made that the market didn't seem to like at the time, again, has recovered all of those losses from that gap down and is now back above the moving average. So two growth names that just had abysmal price action just about a week or so ago, making full recoveries pretty much back to where they were before those nasty gap downs or bad price action occurred. So I just wanted to point that out. I thought it was interesting. I mentioned steel having a nice day today. Nucor up about 10%. You can see the way these moving averages are hooking. Major volume on this, major positive price action, closing at the top of the range, above the 200 for the first time in a while. So Nucor and STLD both diverging from the XME ETF here. As you can see, XME was just barely flat today. Both of these names up pretty significantly, NUE being the main leader of the steel group. Some other growth names that have good days today or had good days today. Shockwave Medical, a name we've been talking about, up a little over 3%. Chewy, a name that's been coming up off the bottom, up about 6% today, very close to that 200-day. CrowdStrike and Fortinet, two cybersecurity names, having solid days, up 2.5%, continuing its stair-stepping type of action here. And FTNT, which is actually in a very healthy base considering what the market's done this year, up about 4%, attempting to get back over that 200-day for about the fourth time in the last couple of months, as you can see here, 1, 2, 3, 4. So FTNT and Crowd having a decent day. Sector-wise, we mentioned XLY, consumer discretionary, up pretty big. XLK and XLV all having pretty solid days, along with ITB, the home builders ETF here. So and this one's very correlated to rates. As rates have kind of paused to come off, you've seen ITB also kind of move higher and ultimately has made a full recovery from this gap down here to just awful price action, but has recovered entirely. On the bad side of thing, we have oils really having a tough day today. I mentioned crude oil backed off significantly. And here you have XOP. It did close at the top of the range, but down about 3% on a day where the markets were up about 1%. OIH, the oil and gas services sector, really having the worst of it. BKR recently reported earnings and it was not well received, down another 4% today. So oil stocks not following through. They had some decent price action the last couple of days, getting back above some moving averages, things like that. But today the price action not so great on oil. And a couple other areas that had a tough day. Coal, AMR, these are the big coal names that are in focus for most people here, most investors. And Arch, both down about 5 or 6% today. So not a great day for the coal names. TAN, also a big laggard today. Just only down a little bit, but relative to the market, relative to the risk on type of area, nothing wrong with this chart necessarily, but down on a day where the markets were green. And LNTH, another name that can trade with a mind of its own, was down about 5 or 6% at the lows, ended up recovering about half of that and staying above the 70 level after trying to break out yesterday. So not necessarily out of the ordinary or unexpected, but a poor day when the markets were green here for Lantheus. And then also the food ETFs continue to struggle here. Corn looks like it's ready to possibly continue its breakdown here. Wheat, same kind of looking chart here, not the best action today, down about 2%. And soybeans, so the food funds kind of all pushing close to new lows or not too far off of it, and not great action here on a lot of these names. So that is going to wrap up today's video. If you have any questions or comments, like I said, feel free to shoot me an email. Otherwise, I will see you guys on the podcast this weekend and the daily market insight videos next week. So have a great weekend, everybody.